Welcome to the Mr. Mojo Canadian Dividend Stock channel. Today, I'm going to present top 10 dividend blue chip Canadian stocks. So all of these stocks that I will present today will be available in Wealthsimple Trade, and we can buy them from there. So if you want to buy from Wealthsimple Trade, or if you want to open an account in the Wealthsimple Trade, please use the promo code given in the description. And please don't forget to subscribe and like the video while you are watching. So let's go to the first one. So I have arranged all of these stocks in a random order. So these are the top five, sorry, top 10 dividend stocks, especially they're called blue chips because of some reason. So I will give the another video link where I explain what is blue chips dividend stocks, so you can check it there. And so the first one is Algonquin Power and Utilities. So Algonquin Power and Utilities is a diverse utility company in North America with a 10 billion in total assets. The company engage in the generation, transmission, and distribution of water, gas, and electricity to communicate across the USA, and also like these companies available in Canada too. So as growing renewable energy company, Algonquin Power owns a strong portfolio of long-term contracted wind, solar, and hydroelectric assets with 1.5 gigawatt of total installed capacity. The company has more than 50 power generation facilities and 20 utilities across North America. Algonquin Utilities business serves nearly 770,000 customers in 12 states across USA through 120, 1200 miles of electrical transmission lines and 100 miles of natural gas transmission pipelines. So around 10 or 15%, 10 to 15% of these companies' assets are valued in Canada, but this is a very, very renowned company for uh, renewable energy, and as the world is going for the climate change and things, we know that. So this is a very, very good company to invest as of now. So the PE ratio currently is 13.59, which is really, really great, considering with a dividend yield of 4.51%. And this is company is like listed as one of the dividend aristocrat too. So coming to the next one, so Alimentation Couche-Tard, which is a very, very known stocks in the Canadian market and as well as in the US market, but mostly in the Canadian market, as I am talking about the Canadian stocks. So is one of like this stock is one of the Canadian companies and the owner of several Canadian convenience stores. The company also supplies route transportation fuel to approximately 1,300 locations in the USA and offer stationary energy and aviation fuel. As a leading independent convenience store operator, Couche-Tard own a network of nearly 10,000 convenience stores in 48 states in the USA, 10 provinces in Canada, as well as other countries. It operates more than 16,000 stores worldwide. By the geography, the US is its largest market, accounting for 67% of 2018 revenues, followed by Europe 20% and the Canada 13%. The company operates through Couche-Tard and Max brands in Canada and Circle K globally. So the market capital is 52.14 billion, but this may change as I have collected those data quite a few months ago, and the dividend yield is 0.72%, which is small, but this is also considered one of the dividend aristocrat because of its lasting ability and because of its continuous improvement of dividend. Going to the next one is TELUS in my list. So TELUS is like the second largest telecom company in Canada, providing a wide range of communication product and services as a data, IP, voice, television, entertainment, and video. So the company has 16 million or more customer, including 10.6 million wireless subscriber, 2.2 million internet subscriber, 1.2 million residential network access line, and 1.2 million TELUS TV customer. It is also Canada's largest digital healthcare provider and has been a major telehealth player for over a decade. The telecom has a strong presence in the wireless segment, which account for 55% of total revenue, while the wireless segment constitute the remaining 45%. Nearly 70% of the total earning is derived from the wireless segment, and the wireless segment comprise data, voice, and other services and equipments. So the market capital is like 35.62 billion, which can be changed. I have collected those data a few months earlier. And then dividend aristocrat is like it's also considered dividend aristocrat. The current dividend yield is 4.54%, and the stock price is not that much in rise, but it's a very stable condition. So it's a really good time to buy the stock for dividend purpose only. So now let's go to the number 4. So number 4, I have listed the Enbridge. So the market value for Enbridge is 107.2 billion with a PE ratio of 17.68, while the dividend yield is 6.31%. Also, and this company is also like one of the dividend aristocrat, as this company has reputation of growing the dividend year to years. Enbridge is one of the largest energy like infrastructure company in North America. It is Canada's largest natural gas distribution, engaging in the collection, transportation, processing, and storage of oil and gas. Uh, so Enbridge caters to 3.7 billion customers in Ontario, Quebec, New Brunswick, and New York. It owns an extensive network of about 192,000 miles of natural gas and NGL pipeline across North America and to the Gulf of Mexico. Its crude oil and liquid transportation system are huge, comprised of more than 17,000 miles of active pipelines. The company is known for its high quality liquids and natural gas infrastructure assets. In addition, Enbridge has like a 3.1 BCF part D of processing capacity, and same as like the 438 BCF of net natural gas storage capacity. It also owns in a like interest in nearly 3,000 megawatt of renewable energy capacity. So this is also a good company to invest. Now coming to the number 5. So this is a different companies other than the utilities. So Metro, we know this Metro like convenience stores. So it is a like grocery stores grocery store chains which has like 15.33 billion market capital with a 1.59% yield, but they are increasing the yield continuously, so they are considered as a dividend aristocrat in Canada. So Metro is the leading food and pharmaceutical company having operation in Quebec and Ontario. The company is one of the largest food retailer in Canada. The company operates through more than 600 food store operating under the banner Metro, Metro Plus, Super C, Food Basics, and Adonis. Its drug business is conducted through 650 drugstore and pharmacies operating under the banners Gene Curtis, Brunet, Metro Pharmacy, and Drug Basics. Metro has developed a successful market segmentation strategy with its different grocery banners catering to 3 different market segments. For example, Metro, Super C, and Adonis all target unique markets and customers. Metro and Metro Plus are leading supermarket chain in Quebec and Ontario, and they are also like recently expanding their businesses in other provinces too. So this is one of the stock need to look for the future or long-term investment. Coming to the number 6 is Brookfield Infrastructure. So this is also like very good stocks considering its diversity. So Brookfield Infrastructure Partner is one of the largest owner and operation of infrastructure network globally. The firm acquire good quality businesses, restaurants, restructure its operation and subsequently sell them. So Brookfield businesses unit include real estate, infrastructure, or renewable power, and private equity. The firm has a diversified portfolio of high quality and long life asset spread geologically across North America and South America. Some of them are also present in Asia Pacific and Europe. The firm is highly diversified by sectors and geographies, which reduce volatility and safeguard against any market fluctuation. Brookfield Infrastructure focuses on ownership of stable cash flow generating assets operating under regulated frameworks. The firm is in a good position to benefit from strong infrastructural development across the world. The firm's objective is to generate an equity return of 12 to 15% in the long term and grow its annual distribution by 5 to 9%. Also, they are trying to do that, and the current dividend yield is 3.53% with a market capital of 29.85% as of now, the data I have collected. Coming to the next one, this is an interesting stocks, as I say. So Restaurant Brand International. So Restaurant Brand International is a leading quick service restaurant company in the world. Burger King, Tim Hortons, and Popeyes are the largest and most popular brand globally. So restaurant brands operate over 27,000 restaurants, including more than 1,780 Burger King's restaurant, 4,800 Tim Hortons restaurant, and 3,100 Popeyes restaurant worldwide. In all, the company has more than 2,500 franchises in all over 100 countries, and it has high market penetration in North America and Europe. The company focuses on localized menus and quality food ingredients in order to attract consumer. It operates through three reported segments: Tim Hortons, Burger King, and Popeyes Louisiana Kitchen. So Popeyes is the restaurant brand fastest growing chain both in terms of revenue and restaurant count, while Tim Horton is one of the most loved restaurant brand in Canada. So there is a big chance that the stock price will rise, as well as the dividend dividend yield will also rise as time will go. So the current market capital is 35.48 billion, while the dividend yield is 3.42%. And this company is also considered as one of the dividend aristocrat. Now going to the number 8. So this is an interesting pick, I would say. Intech Financial Corporation is largest provider of property and casualty insurance in Canada and a leading provider of specialty insurance in North America. The company's popularity can be gauged from the fact that about one in every 5 Canadians is a customer of the Intech financial product and services. The company enjoys a 17% share in the P&C insurance market in Canada. In terms of business segments, personal and auto accounts for nearly 40% of DPW, like direct premium return, followed by personal properties 20%, commercial line in Canada is 25%, and commercial lines in USA is 15%. About 85% of the company revenue is derived from Canada, and the remaining 15% is come from USA. The company operates through Interact Insurance, Broker Link, One Beacon, and Blair Direct banners. And the current market capital is 29.90 billion, while the PE ratio is really good, 14.27, and the current dividend yield is 1.96%. This company is also one of the dividend aristocrat, and it's going to increase its dividend from time to time. My number 9 pick is Canadian National Railway. I know this is very popular stocks among the new and old investors. So Canadian Railway Investor is a leading transportation and logistic company in North America. The company owns the only transcontinental railway line in North America and provide intermodal tracking, freight forwarding, warehousing, and distribution services. Uh, as North America's leading supply chain player, Canadian National Railway carries more than 300 million tons of cargo annually. It is a fully integrated rail and transportation services company and is a top mover of aluminum, iron ore, and base metal ore in North America. Canadian National handles over 55% of all Canadian chemical production and services. The three major petrochemical centers in North America. Its product portfolio is well diversified with intermodal accounting for 25% of revenue, followed by petroleum and chemicals and grains, along with fertilizer, each at 17%. Forest products, metal, minerals, automotives, etc. like are constitute the remainder. So the market capital is currently 118.47 billion, and the dividend yield is 1.47, and this is one of the renowned dividend record in Canada. Coming to the next one, or the last one in my list, is Canadian National Resource. So Canadian National Resource is a diversified and independent energy producer in the world. It is the largest independent natural gas and heavy crude oil producer in Canada. It's operate a balanced mix of natural gas, light crude oil, heavy crude oil, and oil sands. The company holds some of the best oil sands assets in the North America, and particularly thermal like in situ properties having tremendous growth potential. The company's business can be broadly classified into exploration and production, especially North America, like North Sea, offshore Africa, like sand mining and upgrading, and midstream, also like refining segments. The exploration and production segments in Canadian natural core business, while the other two businesses provide a nice diversification as well. The Canadian natural has a balanced mix of natural gas, light crude oil, heavy crude oil, bitumen's, and SCO. The company also owns midstream assets consisting of two crude oil pipeline systems, and also like plants which enables the transportation of heavy crude oil in international markets. The current market capital of this company is 62.64 billion, with a annual dividend yield of 3.56%. And definitely this is also a dividend aristocrat in the list. I would like to thank you all for watching the video, and please don't forget to subscribe and like the video. Also, you can share the video, and thank you for watching. If you can also use my promo code for Wealthsimple in the description. And thank you so much for watching the video. Have a great one.